In this video, traders, we're going to look at confirmation can kill the trade. Sometimes you need to be braver. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so confirmation is basically defined as waiting for some strength. If you're a buyer, you can go long, or waiting for some weakness to go short. In other words, if you're waiting to go long, you're looking for the price to kind of form whatever pattern it is and then show strength, and you're buying into that little bit of strength for it to go further. Same with your weakness, you're waiting for some weakness to continue and then jumping on that weakness. You want to see an extra layer of confirmation in the trade before you take the trade. And that often means giving up a chunk of price, but sometimes at the expense of giving you extra degree of certainty in the trade. Now, there are some trades, I agree, you have to wait for some kind of confirmation. We'll look at those in a second. But there are other trades where if you wait for confirmation, you've almost lost the sweet spot that you've gained in the first place. And so sometimes, guys, confirmation, forget about it. You're better off being much braver, stepping up, managing your risk accordingly, having a stop loss in place, but just putting the trade on when no one else wants to put that trade on, because that will give you the edge. Because very often the pop you get, and by that time everyone else is piling with confirmation, that's enough for you to take some risk off the table and then play, as you want to. You've grabbed some, then whatever happens will be. Now, there are some trades we're going to look at in a second, which yes, you probably are better waiting at least for a second attempt or something, some kind of confirmation before you pull the trigger. But there's some that not. So let's have a look at some that potentially you're not. So imagine just some charts here I've got for you. We've got one here. Let's just call this one number one so we know where we are. We'll go number two across here and this way around. Okay, so downtrend here. We've put in a low at this point. Okay, and the market now, let's assume we already have a bias and a thesis to go long. We're not just shooting from the hip here. We're not just in the middle of a range. We've got something that's valuable, and we've kind of said to ourselves, hey, you know what? We kind of feel that the market's going to push lower, maybe retest to go high. So you've already got this. So if you get this, you get the retest, then you don't need to wait for confirmation, because a lot of people will say, well, actually, you know what, it only really is valid and confirms when it takes out that high. You don't need to wait for that. Yes, you might still get, if it's a really nice, strong thing, you might still get a good breakup and it does whatever. And for some circumstances, maybe, but in this kind of circumstance, when you've had a break through the low that's then pushed back up, and you can add volume into it, you can add ticks, whatever else you're trading. If you're trading Forex, you can add other correlated things, time of day, etc. But let's say it's done that, then waiting for that, you're going to give up all of this juice in the trade just to get confirmation. And it could easily put there, pull back and mess around. And in fact, it could even come up and then go lower. If you're taking it here, your stop's reasonably tight, because if it goes to a fresh low, you don't want the trade. And you've got all this opportunity to potentially sell some into that. If it ticks loads of boxes, you don't want to be selling any into that. You want to be adding to the trade, of course. But in some circumstances, you're like, you know what? This is still very heavy. It's a little counter trend pop. Whatever time frame we're trading on, I want to be selling it into new highs. That's just the way I need to be framing this. And so you can be selling it into here. Anyone who's buying it, you can say, hey, take mine, take my stock, take my futures contracts. And then if it does roll back, you're much more comfortable position, much more ability to sit through some noise for it to go higher. The fact that you're waiting for this means that you're really offside. And don't forget, guys, it skews your risk reward ratio. I've talked about this quite a few times. If you're here and your risk is, let's say it's 50 pips, 50 points, whatever, let's say you've got some sort of target up here at 200. I mean, all of a sudden, yes, that's not too bad. But then if you're taking it there and it was, 20, all of a sudden the risk reward ratio is 10 to 1. And so it really does change the game. So there's one. Another one could be here, like your standard bull flag type stuff, or pennant, whatever you want to call it. A lot of people, again, want to wait for a break of this high. Now, I'd argue that you could possibly take it on this. You could possibly take it if it breaches through the low and pushes back up. Again, not having to wait for the further confirmation, just having a go at it. Now, does that mean the chance of getting stopped out are higher? Probably. Not always, but let's assume they are for now. But the fact that you're getting much better risk reward ratio on the trade means that it can make up for that. So that's the other kind of thing. If you're getting a flush down lower, really if you're getting a little flush, guys, and literally like brave enough, don't even wait for this still dip. very often I'll just step in. If I perceive that's a tail there and just see some stalling, then I'll take it, and I'll have a good chance of it, popping back up. If it doesn't, it doesn't. Even if it's a 50-50 shot, the fact that you've got the weight behind it could mean that it pushes up higher, or you wait for a little bit of a pull, get a little bit of a tail there. So anyway, let's not go into the intricate details. I'm getting stuck down here, but the point is that kind of thing, you probably don't need to wait for the confirmation of it popping right up and taking out that high. Let's have a look at this scenario. Now, this is a slightly different scenario. The scenario here is you come up to a prior level of resistance, whatever that may be, gap fill, 52-week high, whatever time frame you're trading, it doesn't matter. The market comes up and tags it. Now, in this instance, I would want to see something else happen before I short it. Don't forget, guys, this is just a personal preference. All of this might not apply to you at all. You might not agree with it. It might not fit in with your trading style, strategy, etc. And that's fine. That's what it's all about. It's about taking little bits that you do find valuable and adding them and discarding the rest. There's no right or wrong to trading. One person makes short going down here, the other person makes a little long there. It's how it works. But for me personally, I don't want to be selling the first tag of this, unless for, okay, there's always exceptions and stuff, but let's just keep it basic for now. I want to be waiting until I see another attempt, whether that's a lower high or a fake out, before I sell it. Because why do I want to do that? And that for me might be confirmation. Of course, you could say, well, that's just this, and confirmation really applies here. And yes, that's really extreme confirmation if you're trading that reversal. But if you go one back, you want to be seeing, for me, I want to see some weakness come in and then take it, because otherwise, we could just drifting through. So the point is, guys, there's a bit of a fine line, right? Sometimes you don't want to just stand in front of something for no apparent reason. If that's just chugging up and it's a grinding trend day, I don't want to just stand in front of that. There's no real reason, or if it's been chugging for days and days, there's no real reason. Just because there's a level you think it's going to stop at doesn't mean it's going to do it. I want to see something before I do it, and perhaps that is some confirmation. There's not extreme confirmation. I don't think any of my setups really require extreme confirmation. For me, it's too late. But that kind of thing. If you look at number four is kind of the trade that you perhaps get intraday specifically, and that's the flush. You get a flush lower, good volume, good move, and you just see it stop, and you just have to step in front of it. You have to step in front of it and accept the risk. You go, right, now this is something obviously that comes with more experience and understanding about how price moves and stuff, but if you've had a long downtrend, the time of day is right, everything's right, ticking boxes. I've done video exclusively on that before, so go and check it out, and I'll probably do another one as well because different things coming up recently, so make sure you are subscribed to the channel, guys. But the flush there, sometimes you've got to step in front of it. When you feel the flush has ended, step in front of it. You put your stop in, you take the hit if you get the hit, and if you get the pop off the low, you say thank you very much, you scale out into the pop, and then maybe hold some for a complete reversal if you happen to be lucky enough. So sometimes, guys, confirmation isn't the right thing to do. You're actually taking on more risk by waiting for confirmation. Sometimes it pays to be braver and take trades when really the textbook says you shouldn't, but in actual fact they give you the best edge, they give you the best possible chance. Now, of course, as I mentioned, sometimes if you're a longer term trader specifically and you aren't too bothered about sitting through drawdown, you have a longer term thesis, then maybe this is completely irrelevant. You want to see this kind of reversal in the strength. You want to be buying late into the move because you're looking for further stuff. But I think for many of us watching this, if we're intraday traders or we're looking for maybe a couple of days kind of move, that kind of swing trader, then really waiting for the confirmation means that you're so late to the party and someone has already beaten you to it. And I want to be first, I want to be second, right? I want to be the first person stops it, let him step in front of the train, then I'll step in and take the risk. But our point is, I don't want to be the 100th guy to enter this, which when you're here, I want someone to step in and stop it, who's got a bigger bankroll than me and doesn't mind getting run over. Then I want to see, when I see someone step in and hold this thing, then I want to step in as number two and go, right, thanks very much for stopping this. I'll assume that you are stopping this dead and I'll step in. And if we're wrong, then we both get run over. I don't want to be the guy who's buying right over here when finally the whole crowd's in, everyone's saying, come on now, it's time to come in, the water's lovely and warm, and of course you get hammered. So anyway, guys, that is confirmation. You kill the trade, be a little bit braver. Whatever you do, you've got to keep the risk managed. Take care. Bye-bye.